All right, we got Sean O'Dowd here. How are you?
Good. How you doing?
Good. All right, so I follow you on Twitter. I love your Twitter content, and I love your YouTube content. I like
Thanks.
it. One feedback thing that I love is I've got a lot of kids, and I like that your YouTube content is clean and stuff. So it's actually
Mm,
applicable to more applicable to kids than I don't know if you have kids or not, but
got to.
okay, yeah. So it's fun. I don't know. Do you follow Goons? Have you heard of Goon Squad by any chance?
Goon Squad. The name sounds familiar, but I can't place where I know it from.
They rebuild cars mainly, but they've done some house stuff. They're here in Chattanooga, but they've got like a couple million subscribers. But
Wow.
they're yeah, it's pretty crazy. But they live right down the road from me, and
Mm,
it's the same thing. Like they're clean, and they just do fun business stuff. So I like that about your content. But
mm.
a lot of interviews they ask like kind of background stuff, but I want to go straight to the content if you don't mind.
Let's do it.
All right. So how you like right now, I mean, you're remarkably successful with consulting. And a lot of people aren't. Like it's extremely competitive, extremely uh dog eat dog, especially like Upwork. And I know you're successful with Catalent. So I'd love to know
Mhm.
like just how you got started, tips, and like exactly what you're doing consulting wise. And if we could just go deep into that out of the gate, I'd like it.
Yeah, let's do it. So I think there's a couple of different things. Um, I agree with you. Consulting is a very competitive industry, but it is very possible to break out. And I think the biggest thing that people do is it's really hard for them to swallow their pride and take work that they feel is, for lack of a better word, beneath them. So when I first got started on Upwork, and I know other people when they first got started, they're looking around and they're like, "Hey, like I I'm so and so. I'm really good at XYZ. I should be paid $300 an hour, and I won't accept anything less." And like that's me, and that's who I am. And I understand that emphasis, and I understand that thought process because it's like knowing your worth, knowing your value, so on and so forth. However, all of these consulting platforms, Upwork and especially Catalent, where I do most of my work now, are a review-based system.
Yeah.
So if you keep like holding your pride and being like, hey, I'm not gonna do those small thing, anything beneath me, you're not gonna get reviews because you're not gonna get projects and you're just not gonna get reviews. So when I first got started, my first project was literally proofreading an email for someone, which is like it sounds ridiculous. Because it's like, do I really want to be doing that? And I had a lot of people in my life who were like, that's complete waste of your time. Like, don't do that. Like, you can't make a living proofreading an email. I was like, yes, but taking that step and taking projects that were not very high earning, maybe like negative per hour earning, is a really good way to kind of get your foot in the door, get started, getting reviews. And then once you've got that, both the reviews and the confidence of having completed a couple of projects, then you can start going upstream. So I did that on Upwork. And then a couple months into it, I switched over to Catalent, which is where I do most of my work now. It's very similar to Upwork in that it matches consultant with client. The difference with Catalent is their clients are almost exclusively mega private equity funds, the ones that you kind of read about in the news, or Fortune 500 type companies that are doing something pretty significant. So like for now for example, I'm working with a very well known Fortune 500 company on their corporate strategy, and it's an awesome project. It's a really interesting project. It's a very uh, high visibility project. Like when this project is done, the output of it will be on CNBC, but I would have never gotten to get to do this project if I hadn't kind of swallowed my pride and be like, I'm okay with proofreading emails. I'm just getting started. I'm getting my foot in the door.
Okay. So what exactly, obviously don't reveal anything about that specific project, but like
Mhm.
what specifically are you like doing on Catalent? Like I know you said strategy, but like if you could get like more tactical.
Totally. So there's two different types of projects that I do most frequently. Number one is private equity, and there's kind of two different facets of that. And number two is the corporate strategy Fortune 500 work. So on the private equity side first, the majority of the work is post-acquisition value creation. So after the private equity firm buys a company, a private equity firm is in a lot of ways not dissimilar from like a very basic house flipper. They're buying a company that's a little run down, they're going to fix it up, and they're going to try to sell it 5 years down the line for more money. So when the private equity firm does that, I am like not dissimilar from like the tile contractor that a house flipper would bring in to help make the house look nice. Like I come in to help make the company run better, run more efficiently. Now, what that actually means can be entirely different depending on the actual company itself. Some houses, when you buy them from house flipping, like need a new kitchen, some need a new roof, some need all types of different things. Like the stuff I do for the company could be very different. Sometimes it's renegotiating contracts with vendors. Sometimes we're talking about optimizing plant footprint. Sometimes we're talking about supply chain optimizations. Like there's different things that could be done. But in the grand scheme of things, it's all built to like make the company better, more efficient, more profitable. So when the private equity firm sells it, they make money. So that's bucket number one. I also do some private equity work pre-deal, which is typically they'll get like a teaser and say like, hey, we've got an interesting, a bank will be like, hey, we've got an interesting company that's for sale. Should we be interested in it? I don't know. So the private equity firm will hire me for like a 3-week sprint to basically find out everything about a particular sub niche industry and say, is this an interesting industry for us to look into? Yes or no. And that is less common because it's typically only done when the private equity firm itself is so busy that they can't have their internal team do that.
Yeah.
So it happens less frequently. And then besides private equity, on the strategy side, Fortune 500, it's very similar work in a lot of ways to the private equity stuff. It's almost exclusively it's working for like an SVP type individual who has a strong hypothesis about, hey, I think we as a business should be doing this, or I think we have a business have an opportunity in here. And my job is to figure out, number one, is that opportunity actually real or not? And number two, how do we actually go about doing that? In a lot of ways, it's like reinforcements for the company because like everybody who works for the SVP is already completely busy and full and doesn't have time to do anything like this, just keeping the lights on and running the business on a day-to-day basis. So if we're talking about growth, we're talking about change, we're talking about expansion, it's almost has to be someone else who's not busy keeping the lights on with the existing business. Those are really the two facets.
Okay, that makes a lot of sense because I was like, the whole time you were talking, like, why don't they just do that like internally? But I totally understand, like, they're already busy doing other stuff. And like, this is kind of a future opportunity that might not pan out. So let's not hire somebody full time for it. So, okay.
Yeah.
That makes sense.
And the other thing too is I'm relatively young, but I do have a lot of experience, and more experience than perhaps individuals internally. When I'm on very specific areas. For example, I don't know as much about their particular business as the people who are already working in it for obvious reasons. However, someone who's working in that business might have done an acquisition once in their 20-year career. On my side of things, because I'm doing these expansion acquisition things all day long, I have a lot more experience in that particular area. So it makes sense to bring me in to help out with those sorts of things.
Man, that's awesome. So you've had previous experience at another job doing that kind of work?
I did. So when I finished school, I went and worked for one of the largest consulting firms when I graduated college. Was there for a couple of years, and that's where it kind of got exposed to this world of like, hey, there's a need for consulting, and these are the needs. These are the types of things that consultants can add a lot of value, and that kind of opened the eyes of like, hey, there's a world where I could be doing this for myself.
Okay. So you've moved, last question on this, then I want to get into your
Mm-hmm.
YouTube channel.
Totally.
So you've gone, you're moving up the value chain, Upwork, Catalent. What's the next steps for you?
That's a great question. There's it's kind of an interesting inflection point of where I'm at of what do you do next. Path number one is you hire people and you try to scale out and grow a consulting firm. That's a boutique small consulting firm with a dozen people, 2 dozen people, whatever. That's interesting in a lot of ways, because then like you're removing yourself a little bit from the day-to-day work and the consulting side of things. The downside to it is consultants are really expensive to hire as full-time employees. So my margin would get crushed doing
Yeah.
that. So it doesn't make sense. Maybe, maybe not. The other problem is it's really hard to sell a consulting firm.
Yeah.
It's like, okay, maybe you can scale it up, but you're taking a margin hit and you can't sell it in the background. So I don't think that particular path is for me. Path number two is stay doing what I'm doing now, like stay small, stay nimble, one per man shop, and just do work myself. That's a really, really great opportunity, and has been literally a life changer for me and my family. The downside to that as well is there's a structural ceiling to it. Like there's only so much work I can do on a day-to-day basis.
Yeah.
Hard to take vacations, that sort of thing. Or path number three is to just do something totally different and use the income from the consulting firm to fund a third path. I think it's probably going to be some combination of two and three, those from an option set in terms of what I do, but to be determined on exactly what that looks like.
Okay, cool, man. That's really wise of you to like think through things like that. Cause there's a lot of businesses I come across and people I meet where they've dedicated their life to like this business, but it's not really a sellable asset. So I'll always love this. The simple is always better in my opinion. Like
Agreed.
less employees, I'm in.
Mm-hmm.
0 employees is the goal. Yeah, there's a good, I don't know if you're a big reader or not, but it's called Millionaire Fastlane. Have you heard of it?
I love that book.
Yeah.
Love that book.
Amazing, really good book. Kind of a bad title, but great book, great guy.
Terrible title. Very clickbaity title, but great book.
Great book. Yep. All right. So let's get into the fun stuff. Your YouTube channel, man. You've blown up. Like I recommend your channel to like, I was having lunch with this guy on Twitter. I met Dan Erb and like, dude, check out this guy's his Twitter got as good as YouTube channel is like phenomenal. Like it came out of nowhere. Tell me about like, just like your goals, like why you went into YouTube and like what your goals are with that stuff. Cause it's awesome. I love it.
Thank you. I appreciate that. And, YouTube was kind of an interesting thing that happened, but wasn't really ever part of the plan. The exact genesis of it was I was on Twitter, and there's an account on Twitter called TikTok Investors.
Okay.
Where they basically share screenshots of absolutely unbelievably horrible financial advice that somebody on TikTok was suggesting.
Sure.
And I kept on coming across this channel or this account on Twitter, and I kept on seeing all of these things, and I was like, these people on TikTok are going to lose people money, a lot of money, if they follow it. And I was like, I was honestly just annoyed. It was like, so I'm gonna try to put out a channel, and I'm not trying to claim that I'm the smartest investor of all time. I'm not trying to claim I'm the best business person of all time. But I do have some experience in starting a business and getting it profitable. And let me try to share my experience and try to provide a more balanced perspective, maybe, because I think a lot of these TikTok people who are like, you should do these crazy things like buying houses on credit cards, which is one of the things I've seen from an advice perspective, like terrible advice. Don't use a down payment with a credit card. It was like, I'm going to create some videos and see what I can do. So I started doing that and was having fun with it. As I know, YouTube is kind of like it can become a hobby type thing because there's a lot of different moving parts and filming and blah, 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 and all that. But the interesting thing was I was looking at it and said, okay, how can I almost, if I'm going to do this, like I'm going to try to make it good. So how do I kind of reverse engineer the past of people who I know have like done a good job and have kind of blown up with it and everything. So what I did was I found a couple articles online that was talking about YouTubers, and from reputable publications that was talking about like how much the YouTubers were making and how many views they were getting and so on and so forth. And actually one of the publications they were going to run an article about me and my consulting business. and they asked me for my tax returns to verify that I was making the money that I said I was making.
Sure.
So it's like, okay, great. So if they're asking me, I know they also asked this YouTuber that they did a profile on.
Yeah.
So like, I feel pretty confident that the numbers that the YouTuber provided were actually very accurate and verifiable. So I took that information. It's like, I feel like this is pretty good. And then I took a scraping tool called Phantom Buster, and I basically scraped through like a dozen or so channels where I also had the verifiable information from the articles and put it all together in a big Excel and did a bunch of data analytics to it. And I think there was, looking at it, there was enough commonalities and similarities between when people started seeing spikes in views and how they were doing things that I was like, all right, like I think it could be possible to try to reverse engineer what they did using this data. And that's the path I've been trying to do on the YouTube stuff. I mean, it's fun because it's trying to see if this path can be in fact reverse engineered.
Oh, 100%. And I think why I like your content is, even though you're a lot younger than me, is you've just got a long-term perspective. Like a lot of people get into YouTube. It doesn't matter. You mentioned TikTok investor. I mean,
Yeah.
and I know one thing you put on Twitter was like 300 videos was kind of like a big
Mm-hmm.
benchmark. And I mean, that's not an overnight. That takes a long time. And
Yeah.
even Alex Hormozy, like right now he's blowing up and he's everywhere, but I mean, he's been doing it for years,
Mm-hmm.
and that's, I love that. So where, man, I've got like so many questions. So what
Hit
are you
me.
doing? Like, how do you find, I guess one thing I struggle with, or one thing I've come across with the YouTube analytics is just, if you can do 3 shorts a day, do you do shorts?
As of like 3 days ago or 4
Okay.
days ago, yes.
So everybody, there's and I can't think of his account. It's Patty something. He breaks down
Yeah.
YouTube accounts. It's an amazing channel, but he's just like 3 a day minimum on shorts. Like you got it. Like, and like, how
Wow.
do you come up with idea? Like, that's just a lot. Like, how do you, like, all of your stuff is like, it's interesting. Like, I like it. It's like, how do you come up with ideas and stuff for the titles?
Yeah. It's it's kind of like a running process. So I've got a big Google spreadsheet basically where I'm tracking everything and keeping an eye on everything. And within that, I have like a list of like ideas that are coming along. So I've been adding to that list as things pop in mind. The other thing that I've noticed, especially when I did that scrape of all the channels, is that everybody was basically remaking everyone else's videos.
Yeah.
Where they all had like literally, I scraped like 12 channels, and there was one video where 6 of them had the exact same title, 6 different channels had the exact same title on it for a video. And I was like, okay, so like this is interesting. So there's a lot of like repetition of videos. It was like, okay, like I'm gonna try to do something a little bit different and like not remake the same video. I'm gonna try not to like make the same video of like, here's the 5 ways to make passive income, like affiliate marketing, drop shipping, like the same old stuff, because that's boring. Everyone's kind of seen that for years now. So trying to do something different.
Okay, cool. Awesome, man. Well, it's super fun. I love it. And then last thing, so I want to be respectful of your time. The real estate, you buying a little real estate. I'd love to hear more about like your real estate investing strategy.
Yeah. So for us, the fortunate that the consulting business brings in income. So the question is like, how do you invest it? What do you put that income into? And real estate is something that I've always been interested in. It was always a question of like when, not if, to get into real estate investing. Like my study break in college was like, I used to look at like, I used to go to LoopNet to like kill time when I was bored in college. So I got into real estate. We started with like small multifamily, out of state, didn't do well at all for a variety of reasons, and said like, okay, let's pull back and think about this a little bit differently. And what we kind of landed on was, and we're in the Chicago area, was But within like a 30-minute drive of where we live, there are literally, no exaggeration, at least 5,000 apartments or houses or condos that are on the rental market at any given point. There are so many. So the question became of like, how could we have property that has a competitive advantage compared to everything else on the market, that people would be excited to rent our properties compared to anything else is? And what we realized was like something like a nice kitchen is not really a competitive advantage, because there's 5,000 properties on the market, like
Right.
2,000 of them are going to have a nice kitchen. So that's not really a big differentiator. So we were looking at it, and what we eventually realized was the differentiator that we found that, in our opinion, people were most willing to pay for, most willing to prioritize, most willing to rent, were going to be homes that were going to be in absolutely really elite high school districts. Because people would want their kids to go to the best high school that they could find. And because there's just not a lot of homes for rent in really good high school districts, they were very much in demand. So we said, like, this seems interesting, we'll give it a shot. So we bought our first single family in a really good high school district here in Illinois. And the house itself it's a Class A house, but it's not like exponentially nicer than anything else. Like, there's nicer homes, I would argue, like 5 minutes in the opposite direction, but it's in a different school district. Anyways, we bought that home and we're absolutely flooded with people reaching out, because they were like, I want to get into this high school district. I need to be there for 4 years for my kid to go all the way through. I don't want to buy because I'm only going to be there for 4 years. And I know the math that I shouldn't buy unless I'm going to stay somewhere for 7 years. So can I lease it tomorrow? And will you take a 3-year lease, or will you take a 4-year lease? And you're like, okay, well, that's not exactly what we were expecting, but great. So we got that property leased. Cash flow, even after reserves, vacancy, everything is greater than 20% return on invested capital on that house. And you're like, okay, we got to do this again. So we got really good at that specific zip code for that specific high school. And anytime a house hits the market that fits kind of what we're looking for, what we found works, we move very quickly to buy it, and have gotten a really nice portfolio put together at this point. And with all of them being on at least 3-year leases, and the sole reason being the high school and people wanting to be here all the way through the high school.
I love that. Many years ago, I was a underwriter, and there was this guy with a portfolio of rentals, and I thought he was lying about the rents he was getting, because they were they were like just very average vinyl siding houses, but he was getting double the rent that I thought it was the market. And the one thing I didn't think about, we unfortunately in Chattanooga don't have that good of public schools, but in this one area that is really good. And it's just a simple math discussion. Instead of paying $30,000 a year for 2 kids to go to private school, it's like pay an extra $500 a month in rent, or an extra $1,000. You're way ahead, just by, so it makes economic sense for a renter to do that. So I love it. And I love single family homes, but I've owned multifamily, and like, man, the tenant quality just sucks with those things. With single family, especially like with the public school thing, like, you're getting families that are going to be there for a long time, because moving just sucks anyway. So I mean, and that vacancy with the moves and I love that strategy. Where are you wanting to grow in that aspect? Are you just more of the same, or?
So we like this strategy a lot, and we agree with you. I mean, every multifamily I've ever seen is predominantly 1 and 2 bedroom units that are like 800 to 1,100 square feet. Like, those are it's going to be a transient population. That's me when I'm younger, bouncing around, not me with 2 kids and like staying in an area for a long time. So we want to double down with this strategy. We don't want to be exclusive to the Chicago area. We're here, so it just has made a lot of sense for us to start here. But we want to essentially replicate this strategy in markets around the country that have the same characteristics of we're going to find an area that's got a really, really, really good public school and double down on that. There's one in Indiana we've identified. There's one in Texas we've identified. One in Florida we've identified. So we'll expand into those markets over the next couple of years and continue trying to buy these properties and hopefully build a really nice portfolio. We've got no intentions of raising a fund or anything like that right now, but yeah, just a really nice solely owned portfolio.
How did you find, like, that's awesome that you're looking at other markets. How did you find those markets like Texas, and it seems kind of Florida, it seems random.
Yeah. So the biggest part that we're worried about in Illinois is just the state of the Illinois finances.
Yeah.
Like the state's broke,
Right.
property taxes are high, and people are moving out. So we wanted to almost go in the opposite direction of what are states that people are moving to, and where are the best high schools that we can find in those particular areas. So that's Texas and Florida specifically. For Indiana, there's actually, we're also looking at Georgia too. For Indiana and Georgia, we found really good high schools, and the ROI is slightly higher there because they haven't had the like price premium increase that Texas and Florida has over the past 2 years.
Yeah.
They've definitely had an increase. It's just not as high as those two. So if I had to guess, we'd probably do the Indiana and Georgia markets first, and then maybe in a little bit when things calm down a little bit, we'll do Texas and Florida.
It's interesting. You're the third person to mention Indiana. I had lunch with a guy yesterday, and then I read it on Zero Hedge. Indianapolis had better rent growth last year than Miami. I mean, it's like not what you would expect.
Mm-hmm.
So
it's a really interesting place. There's a lot of interest in Indiana.
So what kind of well, last question, I promise.
No, totally.
All right. Like what? Because I know I hate all these like on bigger pockets and stuff. There's all these like rules, and I don't understand. I've been doing real estate investing for like over 20 years, and I don't understand some of these rules. What kind of, I like the unlevered yield on cost metric because it takes out the financial leverage and stuff. But what kind of metrics are you looking for when you analyze like a single family house?
Yeah. We keep it super simple. We're looking for our return on our invested capital. So when we buy one of these properties, our average purchase price is 436. So we're basically going like 90K out of pocket to buy the property, and we want, from just a pure cash flow perspective, we want 15 grand in year one coming back to us. So that's the most basic way to look at it. There's lots of other things, of course, appreciation, principal pay down, depreciation, all of those good things that come out of the property as well. But we can get those on any property almost, as long as we're not buying something crazy that's going to where there won't be appreciation or anything like that. So because we can get those elements almost on most properties, we want specifically that cash flow of roughly 15 in the first year.
Yeah, so 1,200 a month in profit. That's
basically.
Yeah, those are sounds like a great deal. I mean, for you, that's good.
Yeah, it's awesome. I mean, our so the first property that we bought, the one I mentioned, was we all in, including a vacancy allocation, including a maintenance allocation, which they're Class S. There's very limited maintenance, and there's the vacancy is kind of silly because it's on a 3-year lease. So like it's not really that big of a thing.
3-year leases, yeah.
Yeah, so it's like we're allocating for vacancy, but we really don't need to be. But like our fully loaded cost is about 2,200, and that property is rented for 3,500. So like it ends up the spread there is pretty solid, and like that's the kind of magic that we're trying to recreate every time we buy the properties.
Yeah. Well, that's amazing, man. Thank you for your time today. Everybody hit up Shout It Out's YouTube channel and on Twitter.
Thanks, I appreciate it.
Yeah. Thanks, man.
Totally.